It seems like on a daily basis the data changes, but the Beige book is really a fascinating history of the previous month in Middle America, not just the major cities where we tend to focus. So what has the Beige book told us about the strength of the US economy?
That's true. It does give us kind of like an inside look at a lot of these maybe smaller metrics that are more overlooked. I mean, in terms of the housing market, they talked about how that supply constraint is still apparent. Delinquencies for consumers are picking up, so it's nothing that we really haven't heard before. Unfortunately for the market action, it wasn't very exciting because I think the Treasury market had sold off so much on that ISM data that was really strong. Maybe on a day that we didn't have that, we would see rates move a little bit lower on a report like this because it did show inflation starting to moderate, growth slowing a little bit, but that market was very high today. We did see those yields up, and this unfortunately was not enough to change the narrative on that today.
Emily, what's the outlook when it comes to stocks from here as we get uncertainty when it comes to yields? It's kind of back and forth when it comes to Fed expectations as well.
There's a lot of back and forth, particularly when we have days like this where we have ISM showing a really strong economy, and then maybe the Beige book showing some pockets of more weakness and inflation coming down. For stocks, it's unclear where we can go from here. At least if you look at volatility metrics, we have seen the VIX very low. And according to sentiment trader data, when we see in August where the VIX dips below 14, which it did in August, and it's still relatively low today, even though we did see a little bit more of the volatility pick up, it tends to mean that the stock market will rally on a 1 month and a 6 month basis, again, according to sentiment traders. So the vol is pretty low here, which could mean that we won't have that big fall sell-off. Seasonally, though, September is not always a good month for stocks.
Right. Now, but the other thing is that suddenly a rate hike is very much in play again, and it feels like this has all happened since Jackson Hole, at which point really the rate hike was, a maybe, but probably not.
Yeah, and we have a lot of time until the rate hike, particularly if the rate hike is going to be in November. And so we have a skip in September. There's a lot of room for more data. So I think traders have to be really nimble here. The Fed keeps saying that they're so data dependent. And so even if the VIX is low, interest rate volatility by the MOVE index, like these metrics are showing volatility is low, it doesn't mean that the intraday moves can't leave people on the wrong side of a trade.